Danielle Shay, VP of Options over at Simpler Trading for a tee up here, a little bit of a preview as to what is to come this week. Good to see you as always, Danielle. It's going to be, I mean, it's the first big week of earnings. We get some of the banks back on Friday, obviously, to kick things off, but some big names to come this week. I want to jump right into a few here because there's a couple to cover. Everyone knows how much you love Tesla and how much you're awaiting your Cybertruck. Guess what? They started rolling them off the production line, according to Tesla, on the weekend. I mean, earnings still a couple of weeks away as far as, well, I mean, Tesla coming up on Wednesday, but earnings still a couple of weeks away as far as some of the chip makers is where I was going with that, are concerned. But last I read, there was 13, 14 different GPUs specifically in a Tesla Cybertruck. Should we be playing Tesla or maybe some of the chip makers instead?
So first of all, I love Tesla here and I love the chip makers here. I mean, I think that they both look great. And, I know that you guys are amazing at trading, day trading and shorter term time frame patterns, but I want to show you a longer term pattern here because this is why I get so excited about Tesla. If we go to a monthly chart, and I mean, let's be real, like it takes forever to trade a monthly chart, right? But it gives me the big picture idea that I have. On this monthly chart, I mean, you can see how we've had this really nice stair-step pattern. This is called a Fibonacci two-step pattern, super bullish. It hit and held this $100 price point. It's trading higher. It's broken through this key area of resistance. And what I love about it is it has this monthly squeeze. The last time we had a monthly squeeze set up, this brought Tesla from $11 a share all the way up into here. So you see this huge move that happened. I think that that's the kind of move that we're looking for in Tesla, which is going to bring us up into $400 and then $500 a share. So longer term, big picture, that's what I'm looking for. And, with this earnings report in particular, I will tell you, pretty volatile name. If I look at my hot zone, this is what I look at when I'm trying to determine, which direction I want to go on earnings. You can see these gaps. Half the time it's up, half the time it's down, right? That's why as an options trader, I really like to just come in and sell premium on this thing. But I will tell you that this quarter, I want to show you something here. You can see how the price is coming right up into this $315 price point, right? It has an $18 expected move on Tesla. It has a squeeze. I think all it needs is a little bit of a boost, especially after these price cuts. And if we can get this thing through 315, that is where it's just going to be phenomenal for day trading because we can get a short squeeze going and a post earnings move. And that's what I'm looking for.
The volatility, I'm glad you brought that up. Volatility after earnings with a name like Tesla is obviously always through the roof, as you said. Sometimes it's about 50-50. We actually went back a couple of weeks ago and did the math on that. It's about 50-50 on the gaps, directionally speaking, for Tesla. The past couple have been huge. Deliveries, huge, going back to the last report for Tesla. I mean, we get these headlines over the past couple of weeks of, the big manufacturers finally jumping on board and switching over to Tesla's charging technology. No one's really even talking about yet the SaaS side of this, or the software side of this, that's in addition to everything, obviously, that's coming with the cars themselves. So, I mean, the catalysts just keep stacking on top of one another.
Oh, yes, definitely. And I mean, that's going to be huge because the thing is that Tesla had to create the entire network, right? And one of the main reasons why I didn't want a Tesla in the beginning was because I said, well, where am I going to charge it, right? And my husband had to demonstrate, oh, look, here, you can drive across the whole country. And that's one of the major differentiators with Tesla. When you go and you charge your Tesla, it takes like 20 minutes. You can run in and get a cup of coffee, right? Most of these other EVs, they just take so long. It's just impossible. So with the fact that all these other companies are changing to the Tesla charging standard, I mean, that's going to be huge for EVs in general, but also for Tesla, who has control over this entire infrastructure. So I think you're onto something here. And I think that, the long-term impacts continue to be huge. You're absolutely right about earnings with Tesla. It's up and it's down and it can be very volatile, but I'll tell you what, if we do get a down move this quarter, I mean, that's just going to give me more opportunity to continue buying this thing for my longer term goal and my longer term plan. And the volatility will still make for great trading.
Yeah, I think a lot of people have been sitting here saying, please go down, please go down, please go down. They want to buy more and buy more. So we'll see. Let's move on. Netflix coming this week as well. I was talking when we came on at 2 o'clock here this afternoon. There was a note, I think it was Friday. It might have been Thursday afternoon or Friday afternoon, highlighting the fact that this Hollywood actors strike and writer strike that's been ongoing is going to negatively affect the Netflix of the world, the Paramounts, the Warner Brothers, the streaming names in general, simply because there will be a lack of new content for the foreseeable future here. That being said, I mean, you rewind the clock a few months, there was a long line of analysts saying, oh, but the ad-supported tier, the ad-supported tier, the ad-supported tier, this thing's going to 500.
Well, I am looking at the writer strike as a potential negative impact, but I think what's good about that is that the news has already come out before. And so I'm hoping it's going to be a little priced in, because I think it's going to be, a major factor as far as forward-looking guidance, and we're already going to know. So I'm hoping that when the earnings report comes out on Netflix, we're going to see some positive impacts from the password sharing, because ideally more people have had to sign up for Netflix because they were using someone else's account before. I think Netflix has also cut a lot of costs because they have started producing less content. But, also I'm looking at the Netflix chart, and it's just been having a massive move. And when you're looking at this major gap that occurred in January of 22, I mean, we are on the way to filling that gap. If you look at the pattern, even just in the short term, you have a bullish daily squeeze right here. You have a market maker expected move of $36. That could bring you up into 475. And at that point, you're just a stone's throw away from filling this gap. And that gap fill would bring you up to about 515. And so I think that looking for a $500 price target and then up into 515 makes a lot of sense. I'm still going to look at Netflix to the upside this quarter, and I'm hoping that they don't hone in too much on the writer's strike, though I do think that that's going to be a negative impact.
Yeah, let's see if they comment at all, during the earnings call, maybe on what is happening. Obviously, a lot of content relies on that to be sorted out. I mean, what a great day today, even 2% here to the upside, trying to get back even higher as we speak for Netflix. I mean, quickly, let's touch on the banks. We got a few back on Friday. We get more this week. Goldman headlining. Anything you see here as far as what happened maybe on Friday or even to come this week for the banks?
So what I love about the banks is that they have caused an additional move higher in tech. And so whenever I'm looking at the banks, that's always my hope, because I love trading the tech stocks right after banks. And so when you look at JP Morgan, you can see that it gapped up 1.8% right after earnings. And then today it's up another 2.44%. So for me, that is perfect. That's great. That's exactly what I want to see for a bullish earnings season, because it just really helps the momentum go higher. As it relates to the rest of the banks, they can be a little bit more tricky. Goldman Sachs, if you look at this chart here, it's been pretty back and forth. The last year and a half, really not much to see there. And then same thing if you look at Morgan Stanley. I mean, with the banking crisis that we had earlier in the year, we're not really seeing any kind of directional trend in these bank earnings that are coming up next. So I'm hoping they're going to be a little bit more of a non-event. So barring any kind of banking catastrophe, my plan is to continue to look for bullish tech off of the coattails that we've already seen, JP Morgan trade higher and the continuous move in the NASDAQ that we're seeing right now.
It was amazing. If you go back to that JPM report, I mean, 67% increase in profit, I think it was, or revenue for the quarter. And everyone kind of just said, okay, fine. It was a bit of a non-event as far as JP Morgan. They all got sold off, as we saw back on Friday. Let's go to Microsoft here. A bit of a nothing day today, dead flat, in fact, for Microsoft. Still got to wait a couple of weeks here for some of these earnings, Microsoft, to come through. But all the focus, all the attention on this ATVI action. I mean, the deadline coming up tomorrow, in fact, for them to get this deal done. The UK kind of saying, okay, go for it, I guess. I mean, they won that court decision last week. Is there a way, a lot of people have been asking, is there a way to play, maybe the deal finalizing and getting done going into it, or are you simply looking ahead to earnings?
Oh, definitely. And I love how you're pointing this out, because anytime that I can have, a major macro reason for a trade combined with my technical setups, it just makes it even better. And I did also hear that Microsoft is going to be having an AI event at the end of this week. So I think that could be another catalyst. I think the Activision deal is absolutely amazing. It's great for Microsoft, and I love that it went through. Another reason to be bullish on the stock. And when you look at the technicals, there's a couple things that I'm going to point out. Number one, you have this fantastic bullish trend. You have a nice cup and handle / double bottom pattern right here. A little bit, not perfect on either one, but both bullish, right? You have a daily squeeze, again, bullish. And then you have the return to that previous all-time high right before earnings. So Microsoft historically does trade higher going into earnings. The last week can be a little bit, back and forth, but generally I'm looking for about the 3-week time frame going into earnings, which, you can see it has been doing that. The other thing that I will point out about Microsoft is that it almost always rallies after earnings. So after earnings come out, I look at the 8-day time frame. And you can see on my stats up here, it says in the post 8-day time frame, it rallies on average about 3.75%. And that's even factoring in the bear market, because we're looking at the last 12 quarters. So when I'm looking at Microsoft, there's a couple things you can do with it. Number one, I own the stock. It's one of my top portfolio picks. Number two, I am targeting 350 on it. I have a couple trades on it, targeting that price in the options market. But I think the next level is going to be 265, because when you get, this squeeze down here firing to the long side, it's going to bring you up to new highs, and then it's going to take you right up to that next zone. And with the post 8-day average being pretty solid, that's a zone that you can target.
I just saw here, it's actually July 25th. After the close, July 25th, we get Microsoft earnings. And then the very next day, hey, guess what? We get the Fed as well. So 26 should be a pretty exciting day. Great stuff, as always. It's everyone's favorite time of year. I read this morning, actually, an analyst wrote, of the 30 S&P 500 companies that had reported so far, 80% had beat. So good start, I guess, to earnings season. Danielle Shay, VP. Danielle Shay is VP of Options over at Simpler Trading. Thank you.
Thank you.